Capital gain is essentially the difference between your selling price and your original purchase price. If there is a gain on disposal of a chargeable asset, then capital gains tax is payable on this gain. You only pay capital gains tax on the profit you make, not the total amount you receive from the sale. This distinction helps in accurate tax calculations. In the UK, individuals pay capital gains tax on profits from selling assets. However, if a company makes a capital gain, it does not pay capital gains tax, but instead the company pays corporation tax on its gain. You trigger capital gains tax when you dispose of an asset for more than you paid for it. This means if you sell an asset at a higher price than its purchase cost, you owe capital gains tax on the profit. Gifting an asset or even its loss or destruction counts as disposal for capital gains tax purposes, so if you give away an asset or it gets destroyed, it's still considered a disposal. Importantly, death is not an occasion of charge for capital gain purpose. This means no capital gains tax is due when an asset passes to beneficiaries upon death. However, the beneficiaries inherit the asset at its market value at the time of death, which becomes their cost for future capital gains tax calculations. What is a chargeable asset? A chargeable asset is anything you can sell for a profit that is subject to capital gains tax. This includes property, shares, business assets, and even valuable personal possessions. However, some assets are exempt from capital gains tax. These include your primary residence, cars, and wasting chattels, items with a lifespan of less than 50 years, like mobile phones or furniture. Spouses and civil partners, exemption. Special rules apply for asset transfers between spouses and civil partners. You can usually transfer assets between yourselves without triggering capital gains tax. Calculating your capital gains tax. First, you deduct the original purchase price and any allowable expenses from the sale price. Allowable expenses might include costs like broker fees, legal fees, and any other costs directly related to the purchase or sale of the asset. This gives you your taxable gain, which is the amount subject to capital gains tax. You then deduct your annual exempt amount, which is £6,000, for the 2023-24 tax year, and this amount has been reduced to £3,000 for 2024-25 onwards. This exemption is crucial as it reduces the amount of your gain that is taxable. Any remaining gain is taxed at 10% for basic rate taxpayers. The rate is 20% for higher rate taxpayers. Gain on residential properties is taxed at 18% for basic rate taxpayers and 24% for higher rate taxpayers. The type of asset can significantly impact the tax rate applied. Imagine you are a UK resident, and in financial year 2023-23 you sold shares for £25,000. You bought these shares for £10,000 and you incurred £5,000 in legal fee. Your taxable gain is £10,000, £25,000 minus £10,000 minus £5,000. This calculation is straightforward but essential for accurate tax reporting. After deducting the £6,000 annual exempt amount, this leaves £4,000 subject to capital gains tax. This deduction can make a significant difference in your final tax bill. Remember, this is a simplified illustration. Real-life scenarios can be more complex, involving multiple assets and varying expenses. Feel free to reach out to me for your specific circumstances. I can provide personalized guidance to ensure you comply with tax laws and optimize your tax situation. The upcoming slides will explain how capital gains tax is calculated for both basic and higher rate taxpayers. It will also cover situations where part of the capital gain falls within the basic rate band and another part within the higher rate band, illustrating how the 10% and 20% tax rates are applied.